Hey there, it's Casey Dimon here, TaxLawAcademy.com, and welcome to our weekly question segment. This week's question comes to us on Instagram from Eric. It says, what's the best way to use OPM for tax sales? So first off, OPM stands for other people's money. That's anytime you're investing somebody else's money, whether it's a person, a bank, a corporation, a partnership, whatever it is. If you have somebody else's money, that's using OPM. It's a very common way to leverage your own money and your own time into multiple deals in real estate. Now, I'm going to provide a few examples on how to use other people's money as a tax sale investor. But I really want you to make sure you listen to this entire video because there's some very important stuff to discuss at the end of it. So first off, if you want to use other people's money as a tax sale investor, you have to understand it's not going to be as easy as some other real estate investments, simply because you don't know exactly what you are buying until it's sold at a tax sale. And you don't have a formal closing process where you can pre-plan everything and have the title company or the attorney take care of all the funds for you. So you have to be somewhat creative here. Now, last week on YouTube short videos and over on TikTok, I discussed using credit cards. If you have buyers lined up, there's a tremendous way to leverage OPM to grow your business. Since most people have credit cards of some sort, there's a little resistance using this option. You simply swipe your credit card or use something like a cash advance if the auction company does not accept credit cards directly. Now, there are, of course, strategies to make it work best, but it can definitely work, and it's how I got my start. So credit cards are one way to use OPM. Another option is to use something like a signature loan. There are countless places out there. Just search online for signature loans. They allow you to borrow funds without providing any sort of collateral. Now, the rates might be a little bit higher than a real estate related loan, but with the types of returns that tax sale investing has the potential to generate, those types of things should not be of concern to most people because the rate that you're going to be paying for that signature loan is going to be very low compared to your return on your tax sale investment if you did it correctly. Another option is to utilize the equity in your home. Access it through something like a HELOC, a home equity line of credit, or a cash out refinance. Another option is through an IRA. Now, of course, you do own the IRA, but oftentimes those funds are not available to you until you retire. So instead, you can utilize a self-directed IRA that perhaps you have funds in from a previous contribution, or perhaps an employer contributed to your IRA for you. You're going to take those funds, utilizing a self-directed IRA, invest them in tax-defaulted real estate, and then return those funds and the profits back into that IRA tax-free. Another one is probably the most popular one outside of perhaps credit cards is by utilizing a partnership of some sort. Now, there are plenty of ways to strategize this properly, but essentially, you'll need either a good track record or a very detailed strategy that you'd present to a friend, a family member, a colleague, or whatever else, and they'd help provide some capital for you. Now, obviously, there are other ways. There's plenty of ways if you're creative enough when it comes to utilizing OPM for tax sales. But essentially, what you need is some sort of agreement where you have the funds up front, then you have the ability to invest those funds as you deem necessary. Because again, you don't know exactly what you're buying until the property is sold, until you're the highest bidder. Now, hear me out. This is the most important part of this video. Many new investors want to use OPM because they don't have any money of their own, and that's okay. But what I see happen frequently is that they do not treat the borrowed funds with the respect that they would treat their own money with. And I want to caution you here that before you even think about utilizing borrowed funds from anywhere, you must 100%, without a doubt, know exactly what you are doing. If you know what you're doing, the odds of losing those funds are extremely low. Using OPM does not mean it is free money. Instead, you are exchanging a percentage of the deal, yes, but more importantly, you're exchanging liability. If you are reckless and you lose those funds, the person you borrowed those funds from can and probably should come after you, whether it's a friend, a bank, a credit card company, whatever else it is. And by come after you, I mean sue you. So you'll find yourself in a lawsuit. Lawsuits are stupid expensive to defend, and if you did lose their money, you will probably lose that lawsuit as well, which means they can then go after all of your assets. If you don't have assets right now, no problem. They can wait until you do and take them when you get some assets. They might even come after a percentage of your paycheck every week if you are employed somewhere. I say all this because I see the silly TikTok videos, Instagram videos, YouTube videos about how easy it is to go out and borrow money. And that's fine, provided you know what you're doing and it works out. But I want you to be cautious, because if it does not work out, you could ruin yourself financially and perhaps even emotionally. I've seen it happen countless times. So think long and hard before you start utilizing other people's money. Hopefully that was not too much of a rant for you, but I hate seeing people get into horrible financial situations because they did not think things through thoroughly. And hopefully, again, this video answers your question. For more information on tax sale investing, be sure to check out all the links in today's video description. Hey, take care, folks. Bye-bye.